Hello, fellow geeks. Welcome back to Bitcoin Math. So today we're going to look at the Retire on Bitcoin calculator. So from the home page, you'll scroll down here to the calculator section under Lifestyle and Wealth Building and click on the Retire on Bitcoin tab. Now, what's the big idea here? Well, the big idea here is that there's a lot of people who have some Bitcoin or maybe a lot of Bitcoin and want to retire and leverage their Bitcoin to pay their monthly expenses and ultimately have a source of income. Well, a lot of people don't want to do that by selling their Bitcoin. So what we're going to model here is what it would take to borrow against that Bitcoin to fund whatever your monthly lifestyle expenses and requirements are, and also factor in some growth, whether it's for just lifestyle creep or inflation or a combination of the two. Now, what most people have a hard time with on the retiring on Bitcoin models is that it also includes metrics for borrowing the dollars against your Bitcoin and rolling that debt forward in perpetuity so that you're never really paying back the underlying principal. And for that reason, we've also created a strategy playbook, which I would encourage you to look at. We've also done a video on this where we've included a couple of our favorite ways to borrow against Bitcoin. We've included some simple infographics here as well, so you can kind of see what the process looks like across these two completely different processes and series of tools, pros, cons, risks, etc., for ultimately being able to borrow against your Bitcoin. So in this particular model, we're not really saying how you could or should borrow against your Bitcoin. We're just showing the raw data. So let's go ahead and get into it here. So on the input tab, pretty straightforward. What are my monthly expenses? Well, I'm going to go ahead and say I need about $5,000 each month. Okay, and you'll see here the annualized number is going to populate. That's $60,000 per year. Now, what's the loan APR? Well, I don't know. What is the loan APR? Well, if you want to read more, we have a link here to Salt Lending. Salt Lending's got their rates and fees and everything posted. Pretty straightforward. You can look at the different LTVs, the different rates, and get a sense of what some of these borrowing costs are. You can also check out Strike or Arch or Ledin or any of the other lenders that are out there to get a sense of what the loan APRs look like. So for simplicity, I'm just going to go ahead and say 10%. Okay. Now, year over year expense increase. My $5,000 monthly expense, how much might that increase year over year as I look to spend more money, live more lavishly? Perhaps I'm going to cut down on my spending. Or perhaps I want to factor for inflation. However you want to model it is totally up to you. I'm going to go ahead and keep it simple and say 5%. Now, this is being modeled over a 20-year period. So keep that in mind when you are modeling this, right? 20-year term, because you need to set the Bitcoin compound annual growth rate average for that 20-year term. Now the icons that we've included here are for Saylor's bear case, 21%, base case, 29%, and bull case, 37% for his 21 years of Bitcoin. So for simplicity and just to keep it conservative, I'm going to go ahead and say Saylor bear case, 21% compound annual growth for this 20-year period. So once you do that, a few things will populate here on the screen. First and foremost is the chart. And what this chart and the associated data table are showing us is really two separate scenarios for borrowing against the Bitcoin in order to fund this lifestyle based on the inputs. So at a 30% LTV or loan to value, what that means is you're taking out a loan that is only 30% of your total Bitcoin holdings. So if you had $1 million in Bitcoin and you wanted a 30% LTV, that means you'd be borrowing $300,000, your loan, against your Bitcoin value, $1 million. Okay? Similarly, with a 50% loan to value, that same $1 million in Bitcoin assets, if you had a 50% loan to value, you would have a $500,000 loan against that same $1 million in Bitcoin value. And this is important because if you want to have a lower risk profile, right? 30% LTV is lower risk because your loan to value ratio is lower from the ultimate liquidation thresholds of, say, 70%, 80%, 90%, whatever they are. But the more you over collateralize, meaning the lower your loan to value ratio, the less risk that represents from being liquidated. But that's also going to require more Bitcoin, right? Because if you need to borrow your $60,000 a year and you want to do so using a 30% loan to value, well, then you need more value to borrow against to get the same amount of money if you were using a 50% loan to value. And that's why this chart reflects the data in the way that it does. Okay? Now, down below here, you're also going to see a table that shows all the data points. So we're going to start in year one, right? In year one, the Bitcoin value is what it is right now. Our annual expenses are, as we've keyed in, $60,000. And at 10%, we're going to pay $6,000 in interest. That means my loan for that year is $66,000. And that means my total loan is also $66,000. Okay? Now, at a 30% loan to value, we're going to take this total loan and we're going to divide it by 0.3, 30%, and we're going to come up with how much Bitcoin value is required. Right? So in order for me to get this $66,000 loan at a 30% loan to value, I need to have 1.87 Bitcoin at this price, which is a total of $220,000 in Bitcoin value. Now, if I wanted to push the LTV up a little bit to 50%, well, I need less Bitcoin, right? I only need $132,000 worth of Bitcoin, and that's only 1.12 Bitcoin at the current market value, okay? Now, where this gets interesting and why the curve looks the way that it does is because in these early years, your Bitcoin appreciation is happening slower or lesser than the amount of debt you're taking against it. And that's why this climbs up so quickly, is because the total amount of Bitcoin required to fund this lifestyle is going to continue going up and up and up as you borrow more and more and more. And that happens because, well, you're borrowing this, your borrowing needs are typically going to be greater than the appreciation of the Bitcoin in that given year. And Bitcoin's compound annual growth means that your total amount of Bitcoin appreciates every year. So in our model where we've got 21% compound annual growth, that means my year one appreciation is 21%. My year two appreciation is 21% on my starting value plus the appreciation from year one. That's the compounding factor. So that's why eventually this curve flattens out and starts to come down because of the compounding nature of Bitcoin's growth and appreciation. Eventually, the amount of money that you're borrowing is actually lower than the amount of appreciation you're seeing on your Bitcoin nominally. And that's why the LTV curve starts to come down over time because, well, you're actually taking out less as a percentage than what you're seeing as an appreciation on the underlying Bitcoin itself. So that's why what happens here as we go to, say, let's look at year 8, right? Based on our 21% CAGR, Bitcoin's market value in year 8 is almost $450,000. Our expenses are up to close to $85K. We're now going to have to pay a little over $57,000 in interest because, well, we're not just paying for the money that we need this year, we're also paying on the total underlying debt that we've accumulated through the prior 7 years as well. So our annual loan this year is $141,000, and the total loan at that point has rolled all the way up to $816,000. right? And in order to get an $816,000 loan, I need to have $2.72 million in Bitcoin asset value using a 30% LTV. That means I need a little over 6 Bitcoin at this price. Okay? So that's kind of why after this point you start to see this number come down, because, well, the price of the Bitcoin is appreciating faster than you are borrowing against it. And again, that comes back to the compounding factor, and that's why early on you see the amount of Bitcoin required goes up pretty dramatically in the first couple of years, first few years, but eventually flattens out and starts coming down over time as the underlying Bitcoin value itself is appreciating faster than you are borrowing against it. Okay? Now, if you really want to see this curve get steeper and draw down quickly, well, what happens if my Bitcoin's appreciating much faster than 21%? What if over the next 20 years Bitcoin appreciated at Saylor's base case, 29%? Right? All of a sudden that curve comes down and it drops more aggressively. Well, what if we hit his bull case? Same thing, right? You ramp up quickly, but man, the underlying Bitcoin appreciates in value so fast and so aggressively that by year 4.5 or by year 4, you've peaked. And after that, the amount that you're borrowing is actually taking your LTV down, because that nominal dollar figure is actually less than the appreciation value of the underlying Bitcoin collateral. Okay? So that's kind of how this works. There's still a lot of mechanics involved here. I mean, you have to find a lender that you trust. You have to find tools that work and that are proven. And, this is not financial advice. I'm not saying this does, should, or will work, or that this is even the best way to do it. But this does represent a directional model and a directional set of metrics and data that you can use to formulate a broader strategy or a broader set of ideas that you can bring to your life if you really are thinking about how to retire on your Bitcoin, and some of the different metrics and some of the different mechanics and some of the different impacts over time, depending on how much Bitcoin you have or need, based on the amount you're paying for interest, based on what you think your annual expense growth looks like, and of course based on what you think the Bitcoin compound annual growth rate will be. So that's it for this one. If you have questions or you want to make a suggestion or you have any general feedback, please do reach out and let us know. We're happy to help and love hearing from you. So appreciate the support, and with that, we'll see you on the next one.